She's the president and CEO of Banríon Capital Management. So, Shana, thank you so much for joining us. Stocks ended the month down for the second month in a row. So, is this a concerning trend for 2023?
I'm not sure it's a concerning trend. I think it's an expected trend. With inflation high and sticky, a restrictive monetary policy, and companies making adjustments, you're seeing layoffs, you're seeing earnings guidance being rather negative. It's unsurprising to me that stocks are selling off. They're still quite expensive when you look at valuation.
Now, you have said that all signs suggest that the Fed will remain aggressive, but you also believe that the economy is resilient enough to avoid a serious recession. So, do you think the Fed is making a mistake it can't bounce back from?
Not necessarily. The reason I think the economy is resilient is because we still have very tight labor conditions. And when you have very low unemployment and tight labor conditions, it's really hard to have a severe recession. We also don't have a lot of cracks in the financial system like we saw in 2008 and 2009. So it's likely that we will see a recession, but it will be largely because the Fed is likely to overshoot because they rely heavily on lagging economic data to make their policy decisions.
Now, Target reported earnings today and issued soft guidance for the rest of the year. And last week, Walmart and Home Depot had similar sentiments. We also saw data that showed retail inventories actually higher than economists expected. So are we bracing for a consumer slowdown in spending?
I believe we are. If you just look at some of the recent personal income and personal spending numbers, as well as the PCE deflator, you can see that personal income has risen slightly, but personal spending, the cost of living, has gone up more. So consumers kind of have to cut back just to be able to maintain their standard of living. And so they're going to cut back on anything ancillary that's not absolutely needed, like they're going to pay their rent, they're going to pay their car payment, or at least try. We've seen some poor auto loan data recently. And they are starting to spend more debt. So credit card balances are starting to increase. So, yeah, I think it's likely that the consumer will start to soften. And again, that isn't necessarily great for economic growth in the next year.
Now, let's quickly talk about the U.S. housing market, which continues to struggle. Why should investors be concerned?
Well, the housing market is interesting because I'm not sure if I'm overly concerned. We have such tight inventory there, and quite frankly, we had so much demand and very limited supply that having somewhat of a correction right now is actually very healthy, but we still have very tight inventory, and just natural demographic reasons, there's going to maintain higher demand than inventory. So we're going to have problems with getting an equilibrium in the housing market for a while, but not to the extent where I think we're going to have a housing crisis.
Well, thanks to Shana Sissel. She's the president and CEO of Banríon Capital Management.